It's another week of Business Morning. Good morning and welcome to the program. I'm Chimezie Obi Iwagu.
And I'm Ini John McQuarrie. Good morning and happy holidays to you. Thank you so much for joining us. Well, we'll start off with the oil markets, where major global markets are still on Easter holiday. But oil markets opened today with prices edging down in early Asian trade after OPEC Plus agreed last week to gradually ease some of its production cuts between May and July. Brent crude futures for June fell 16 cents to $64.70 a barrel, while U.S. West Texas Intermediate crude for May was at $61.32 a barrel, down 13 cents. Both contracts settled up more than $2 a barrel after the OPEC Plus decision, and an optimism about energy demand after U.S. President Joe Biden outlined a $2 trillion infrastructure spending plan. The Organization of the Petroleum Exporting Countries, Russia and other allies, a group known as OPEC Plus, agreed to ease production curbs by 350,000 barrels per day in May, another 350,000 barrels per day in June, and further 400,000 barrels per day in July. The decision came after the new U.S. administration called on Saudi Arabia to keep energy affordable for consumers despite demand concerns, as part of Europe remain under lockdown, while Japan could expand emergency measures as needed to contain a new wave of coronavirus infection. Well, under Thursday's agreement, OPEC Plus cuts would be just above 6.5 million barrels per day from May, compared with slightly below 7 million barrels per day in April.
And the 2021 spring meetings of the World Bank Group and the International Monetary Fund begins today and will be held virtually till April 11th. At the heart of the spring meetings are meetings of the Joint World Bank Group and IMF Development Committee and the IMF International Monetary and Financial Committee, which discuss progress on the work of the institutions. Other featured events include regional briefings, press conferences, and fora focused on international development, issues of debt, economic recovery, vaccines, and climate. In her customary curtain raiser speech ahead of the meeting, which will hold virtually, IMF Managing Director Kristalina Georgieva said high uncertainty is one of the greatest dangers facing the global economy. According to her, global economy is on firmer footing, but economic fortunes are diverging. Many economists say the world is in a cruel situation because the uneven arrival of vaccines demonstrate that a few rich countries get them first, whereas the health and economic condition for the many are dire. The latest available OECD economic outlook suggests that the recovery in 2021 will be divergent, meaning that certain countries will do better, but others will continue to struggle.
Well, still on the World Bank Africa's Pulse reports, in its Africa Pulse report says that Nigeria moved out of last year's recession faster than expected. The World Bank stated that real GDP in West and Central Africa was estimated to have contracted by 1.1% in 2020, less than what was projected in the October 20 Africa's Pulse forecast. The report stressed that 0.1% expansion in the fourth quarter of 2020 from the 3.6% construction signaled a faster than expected exit from recession. The Bretton Woods Institution noted that Nigeria's 1.8% real GDP contraction also beat the October 2020 forecast, despite the weakened oil sector, which led to a sharp fall in oil GDP. The World Bank says that Nigeria's muted growth prospects and slow vaccine rollout would weigh on the sub-Saharan Africa's outlook. The report maintains that despite higher oil prices, Nigeria and other oil exporters expected to face slower recovery compared with the rest of the sub-Saharan region, where activity is projected to strengthen. Nigeria's real GDP is projected to rebound at 1.8% contraction in 2020 to moderate growth of 1.4% in 2021, driven by telecommunication services, trade due to gradual opening of borders, agriculture due to an additional influx of labor, and construction in the context of higher oil prices and fewer mobility restrictions. According to the report, consumer spending and business investments are likely to remain subdued in 2021 as double-digit inflation, high unemployment, and the slow rollout of COVID-19 vaccine weigh on households' real income and business confidence. The report also says that limited physical space will also constrain the recovery. Growth is projected to pick up to 2.1% in 2022 as rising oil output bolsters exports and the rollout of COVID-19 vaccine gathers space, helping to boost private consumption and fixed investment.
Well, Nigeria's economy no doubt showed surprise resilience in the fourth quarter of 2020. This increase in GDP was more distinct because it happened in spite of the NSAS protests in late October, where we have just entered the second quarter of the year. How has the economy fared in the first quarter, and what is the outlook? Dr. Biodun Adedipe, the chief consultant at B. Adedipe Associates, joins us next. We're looking at the first quarter of 2021, how the economy has fared. Dr. Biodun Adedipe, of course, is here with us. Good morning, Dr. Adedipe. Good to see you, and happy Easter to you.
Thank you so very much.
Good morning, sir. You're
Good
welcome.
morning.
Happy Easter to you.
I wish you the same.
Well, we have seen the sudden exit from recession surprised everyone, including the World Bank, right? And now, although we have seen some economic proxies decline, all right, so we've just finished the first quarter 2021, and we have entered the second quarter. How would you describe the first quarter?
All right, thank you so very much for that. Let me start from the premise that exiting recession for Nigeria was not a surprise to me. And the reason is very simple. When you look at the data of our GDP, as at September 2020, our GDP figure for the first 3 quarters of 2020 was about 75.04% of the GDP figure for 2019. So we saw then that the economy was moving at the same pace as it did in 2019. So we knew also that if we finished 2020, the likelihood was that there would be a very tiny, growth rate, which of course, no matter how little, it will take you out of recession, which was what happened. And we, of course, had mentioned this. Now, if you look at first quarter this year, there's a peculiarity to Nigerian economy, which oftentimes people didn't take into account in the discourse. And that's the fact that the informal sector is a big number in our economy. And oftentimes, the activities happening there are not fully captured in the data we measure and interpret. So now, and that sector also, because of its nature, is where the impact of COVID-19 is not fully felt.
Oh, yeah.
Okay? So, and you can see that anywhere you go in Nigeria, on the roads, a lot of people still move around without their face mask. Okay? People don't maintain social distancing in contact-intensive economic activities. So when you look at all of this, it tells you that, look, the informal sector was still running business as usual. So if you look at that now and come to the organized private sector, which oftentimes is represented by the stock market, which of course we say is a barometer for the state of the economy. So by the time you take those two, you get a good picture of what happened in the first quarter. Now, the stock market in Nigeria, the index, grew by about 6% in the first quarter. So that tells you that as a lead indicator of what will happen to the economy, we should expect some modest growth in the first quarter of this year. In fact, from our own perspective, in our own interpretation of what is happening in Nigeria, what we see as likely to happen for first quarter this year will be close to what the World Bank is projecting for the entire year. So let me leave it there. We can then talk about it.
All right. Now, the IMF World Bank Spring Meeting, of course, is starting off today. And, usually in the way they practice it there, the IMF is likely to review its global economic outlook and perhaps may move that forward for Nigeria, considering certain macroeconomic parameters. Now, this is notwithstanding some other analysts having expressed some kind of apprehension about the first quarter, even though you are not. Now their fears are based on the less than flattening. I mean, we just saw the FBN Quest PMI, which is currently at 51.4. That's from 53.
Right.
In March. So what's your view about a flatlining of GDP and the possible need for an additional, fiscal stimulus like practice in other advanced economies?
Yeah, really, the situation where we are now, the recovery is weak. That's the reality. And what that tells you is that the concern should be more about stimulating economic activities, which means the government must still look for resources to stimulate the economy, either in terms of direct fiscal stimulus or indirect by way of certain concessions and maybe incentives that are not monetary in nature. So what this means essentially is that you want to drive economic activities, but you must also ensure that this time around, the stimulus is well targeted. Yes, we did well in 2020 responding to the state of the economy, but targeting means you look at the economy, look at the fact that the informal sector is big, and then look at the fact that a large number of your people are at the bottom of the pyramid, which means the focus in terms of getting this economy growing strongly and inclusively should be at the bottom of the pyramid. So and what happens there? You find that mostly in terms of the financial sector, for example, it is microfinance banks that intervene there. They do more of intervention there. So in which case, there should be more attention in stimulating activities in the microfinance sector. That's on the one hand. Now, looking at about 40 million customers that those banks have. Yes, there are many in number. We have 40 million customers at the bottom of your pyramid. It's a good number to work with in terms of intervention. That's on one side. Now, the other side to it is that there's a need to also expand the revenue base of the government. Oftentimes we talk about, tax evasion, this and that, but the reality is that we don't address tax issues the way we should. Now, I was a part of an international tax conference in the last 2 months, and one of the major issues happening internationally is that governments are not looking at putting so much pressure on individuals and corporate entities that are already in the tax net. The focus is how do we attract those that are outside the net to come into it. That is the most effective way of expanding revenue. So when people become worried, like you said, about what we expect to happen to our GDP and then the trajectory of that for the rest of the year, they look at our external debt, they look at domestic debt, they look at the burden of that in terms of servicing and repayment, and then they look at government revenue and say, if we compare these two, revenue vis-a-vis debt obligations is very high. And so we then make the argument that this appears unsustainable. So where did everything starts is, one, how do we expand the tax net on the one hand? Two, how do we introduce incentives that will make corporates and individuals be more willing to pay taxes and levies instead of pursuing them and making it appear that I think I should rather close down this business.
Well, I want to
continue.
I want to take it up from there, Dr. Adedipe. Last week we were talking to Mr. Rwani on this issue of taxation, for corporates in particular, and he talked about tax for asset conversion.
That's right.
Where you have some of these companies who perhaps pay a lot of taxes, and of course, when these taxes are paid, we don't really get the value for it. Now, what about having these companies converted to infrastructure development? So some of those taxes go into infrastructure, which we can see, which can actually be monitored and be accounted for.
Even people not paying the taxes because they are skeptical about what is being used for.
Absolutely.
They are not seeing the effect. So
Absolutely.
this would even make it, more appreciated. And then
So
perhaps
do you think that's a good way to actually go?
I agree with that totally. We call it social compact. And what that means is that I pay taxes, levies, and dues to government. In return, government does something I can relate with. So now, the way it works is that if a company is evaluated to have a tax liability, let's say of 1 billion naira for the sake of discussion, and now the particular road leading to the factory, or let's say that manufacturer, requires about 600 million to fix. That is without all the fat that is normally in contracts in Nigeria, okay? So now, cut away the fat, 600 million will deliver the road. Now, if that company steps forward and makes an offer to government, let's fix this road. You define the engineering specifications and standards. We comply with that fully. And of course, you have your inspectors also confirm that anyway. So instead of paying 600 million naira in cash to the treasury, we will deliver this road. We pay 400 million. So in which case, we do the road, you give us tax credit, and we set that off our tax liability. We see a lot more infrastructure delivered in Nigeria, especially by the OPS, that's the organized private sector. They will do a lot of that. Of course, we do this informally also. Estates where we live and the rest of it, we contribute money and fix roads. And of course, even
we don't
electricity.
connect it to the government. We have not seen years.
We do that, you know, like social responsibility, so to say. In our estates, communities, we contribute money. We buy transformers, electricity transformers and the rest of them. Of course, I mean, unfortunately, the discos come over once this, you know, inaugurated, they take ownership.
Yes.
Okay. But of course, we do all this to ensure things work. So I believe it's a way of converting what is due as tax into tangible public assets. Which interestingly also, as I always say, that that's why I always emphasize spending on roads. When government spend on roads, good quality roads, it's an investment that comes back to government also as our revenue. And how? The more activities that take place because we spend less time commuting, the more value we create for individual companies, and the more tax we pay to the government. And that's the relationship between them all. So we therefore will see investment in roads as actually investment in inclusive growth of the economy. That's the way it goes.
Well, talking about inclusive, when you mentioned 14 million people, you know, in the informal sector, I'm thinking, is there no way to have a more inclusive economy? When we talk, whether we talk about tax or we talk about, you know, being able to forecast. I mean, even the World Bank couldn't really get, you know, the forecast because of the high number we have in the informal sector.
That's right.
Is there no way that these people can be incorporated into the formal economy so that we can have a better planning, you know, better projection, you know, for the economy?
Yeah, it's not that difficult. Because like we say about Nigeria, the things to do are simple and commonsensical. But oftentimes we don't do them. And then we begin to ask ourselves, why are we not doing this? Now, one of the things that I proposed to the government, I think about June last year, was that we could use the opportunity of our response to COVID-19 to intervene creatively and encourage tax compliance. And I said it can be done this way. Look into your records, companies that pay tax, at least as at that point in time we had data for 2018. I said, look at those companies, look at individuals, and give them a 5% rebate on the tax they paid in 2018, credit to their accounts. Now, at that instance, what comes to the psyche of the individual is that you mean government can give me some money back because I complied 2 years ago.
All right, Dr. Adedipe. I think we still have more to get out from you there. Talking about the exchange rate, talking about the inflation rate, these are the economic indicators on focus. Yes. So we crave your indulgence. We'll have to get that. And of course, what should we now expect? Should we be optimistic? Should we be pessimistic? Or should we be realistic? We'll talk about that. We'll take a break now, and we'll continue that conversation after the break. Still looking at the state of Nigerian economy, and we still have here Dr. Biodun Adedipe. Thank you very much, Dr. Adedipe. Well, before we went on that short break, I was talking about some of the economic indicators that we track, the inflation numbers, the exchange rate. In fact, there has been some ambiguity about Nigerian exchange rate management, and recently we have seen oil price spike as high as 100% from where it was coming from in 2020. And one would wonder why the Naira is being battered at this time when we still have the oil price as high as it is. You know, so what's your view about exchange rate flexibility and managed floating?
All right, thank you so very much for that. Now, that brings us in context of managing the exchange value of the currency. And there are many issues that surround that. Now, there are about 12 of them that we watch to determine whether what we should expect is for the currency to gain value or to lose value. But fundamental and all that is the interplay between the demand and supply for it, which we often interpret also as this. The demand for foreign currency is derived, which means there is, excuse me, a need for something that requires you to get foreign currencies to pay for. So, and the question will be, what do we need foreign currencies to pay for? What do we import? And that takes you to our trade data. Okay, trade data is not looking well at all. The last 5 quarters in Nigeria, we have had trade deficits. Okay, that's merchandise trade deficit. Now, what that means is that we have been importing more than we're exporting. All right? But again, as at the 4th quarter of 2020, we had the highest historical figure of imports, close to 2 trillion naira in a month. 2 trillion naira in a month, because about 5.9 trillion naira in the quarter. All right? So the question now is, what are we importing? If you distill the data, you find that machinery and transport equipment accounted for close to 40%, which is somewhat positive. Because if you look at that, it means it goes in 2 ways, either into manufacturing or into road and rail transportation. That's understandable. It assures you a better future in terms of infrastructure and in terms of what is happening in the manufacturing sector. You made reference to the PMI earlier on. What is Manager's Index? Now, I have no problem with that, and you know why? Because it's above 50%. The interpretation anywhere in the world is that if PMI is above 50, your manufacturing sector is expanding. So even if it came down from 53 to 51 point something, which is still good news, manufacturing is expanding, which is good for us going forward. Now, agriculture is also there. You find that the increase in importation of agri products actually went up significantly in the 4th quarter of 2020. So what that then means is that we are needing more foreign currencies to import things ordinarily that we should be producing locally here. All right? So that will bring pressure on the exchange value of your currency. But I'm not bothered so much about that. And you know why? If you look at our external reserves, yes, it's been hovering around 35, 36 billion, $34 billion. How many months of our import bill can that pay? That's what you always consider. If it's above 6 months of your import bills, there's some measure of comfort. So if I were the CBN governor, therefore, I won't worry my head about that. People often bring into that conversation, oh, we are owing so much, we have to do external debt servicing. There's no country in the world except Nigeria that did that in 2007. Go and check the history. That ever paid its external debt all at once. It's not done anywhere. Okay? So if that is the case, bringing that into the conversation is, in economic language, let me go academic now, we call it dubious argument, you know, in the academic language. All right? So for me, therefore, looking at the exchange value of the naira, I wouldn't worry my head about that. Now, what central bank governor possibly will have to worry about is if the rate at the investor-exporter window now moves so far away from the official rate. That's when they should be worried. But that platform was created to measure the pulse of the FX market. So, but oftentimes, unfortunately, we interpret the exchange value of the naira by what we see on the roadside, which is what they commonly call the parallel market.
Well,
all right?
the central bank governor has always said that is not the determinant.
Precisely. I agree with him.
Exchange rate.
I agree with him on that. Okay?
But that is where a lot of people go to anyway, if they have to have access to the exchange rate.
Well, unfortunately, again, if you look at that sector, we ask the question about volume. What volume actually is driven in that segment of the market? So volume is the issue when it comes to FX. It's not so much as the rate. But when you go to parallel market, everybody knows that it's because you have no access to official window.
That's why you
don't have access to I and E window. That's why you are here. So normally I will price higher than those two segments.
We really don't just before we go.
Yes.
I mean, the naira to dollar policy,
That's right.
has it made any impact in
for me, two things.
Yeah.
One is the window is open for only 2 months. Okay, so I don't see any much value in that on the one hand. Then also look at how much is actually coming through that. Just some few millions, okay, of dollars. That is insignificant compared to what we need to drive our external sector. So for me, we should look at that again.
All right.
okay.
So what should be the major takeaway now? I
Yeah.
mean, looking ahead, I talked about the fact if we should be optimistic, if we
Yeah.
should be realistic, if we should be pessimistic.
I will say you've had the wrong person that question. You know why? Because I'm an incurable optimist as far as Nigeria is concerned.
Oh, wow.
And that is my view about the Nigerian economy. So when, therefore, I interpret data and things happening here, is also why oftentimes I am different. And why is that so? Economics is about the data you are looking at and how you are interpreting it. So both of us can look at the Nigerian economy. I see some things different than what you are looking at. And I therefore interpret it differently. And form my opinion that I say in the Nigerian economy that will likely grow this year by about 2.54%. That's my projection for the year. So that is way, way above what the World Bank and IMF are projecting. We did the same thing last year. They got it wrong. And we got it right. Okay? And that was not the first time. So, but my view as an optimistic Nigerian and understanding what happens here locally is that this economy will do about 2.54% this year.
I guess you are taking into consideration the informal sector, which the World
By all
Bank
means,
doesn't see.
doesn't take
Well,
into account.
let me share that same optimism,
Optimism.
with you, Dr. Adedipe. Thank you very much. We do appreciate it.
Yeah, we appreciate your
It's my
presence.
pleasure, and thank you for having me.
You're welcome. Well, as the world battles the COVID-19 pandemic, businesses continue to find ways to remain in business. Startups dream of building their businesses to the top, and some new business ideas hope to come on board. But what does it take to make your business dream a reality? That's our conversation in a moment.
You're welcome back, and we have with us now Chukwuka Moye, is an innovation strategist and is here to tell us how we can make our dreams become reality when it comes to starting up a business. Good morning.
Good morning.
Good morning.
Thank you for having me.
You're welcome, and happy holidays to you.
Same to you.
Well, it's no longer news that the unemployment rate is very high, and youths often get encouraged, to use their entrepreneurial skills. But sometimes they describe the Nigerian environment as being too harsh. And yet we still see some people, progressing and making impact. You are one of those, and you have been recognized not just in Nigeria. Could you share with us how to deal with some of these harsh factors?
Okay, thank you, Ini. There are a number of things that I try to communicate to young people and entrepreneurs generally as, things they have to consider, when they are trying to overcome and navigate these difficult times. I mean, I listened to the previous segment. We spoke a lot about, the economic situation, inflation, and all that. So we know what the context is. We know the challenges that we're facing. The question is, okay, how do we then, navigate, these challenges? But I think I'll go first to some fundamentals about business, about entrepreneurship. One will be that companies need to sort of go back to the basics and think about things such as ensuring that you have a responsible culture. As human beings, it's natural for us to sometimes, because of the constraints and limitations that are presented to us, to do things that we shouldn't do, right? And that's also reflected from a corporate perspective. So where an organization should exhibit certain traits, they are no longer doing it because they will tell you, na economy or na economic situation. We get that all the time. But guess what? Those things that you're compromising on are now affecting the way your employees, for instance, view their experience in your organization. So if you say things like people matter, if people matter to you in your organization, guess what? You will do certain things that will make the people a priority. But you have employers today that say, no, don't bother. If I invest in them, they will leave anyway. So why should I spend time and give them focus? If I do this, that, and the other, these people, so why bother? So one of the things that I'm trying to say with regards to having this responsible culture is to focus on people. because ultimately it's the people that drive the business. Let us not ignore them because the situation
For
is
the
tough.
profits that one wants
Now,
to
but
make.
when you talk about this corporate culture or responsible culture, yes, you're talking about the employer. What about the employee? I mean, inculcating culture, it's not just for the employer. The employee who knows, excuse me, I have to resume at so and so time. Have you resumed at that time? You know, those also matter.
No, it's a
don't they?
fantastic point because now we're now talking about who's responsible for culture, right? When you talk to the employees, they'll tell you, it's Oga. It's the Oga that is responsible. They're supposed to give us direction. When you talk to the employer,
So is it
and
the chicken before the egg,
well,
or the egg before the chicken?
it's both actually. It's both. But in terms of who gives direction and who steers, it's got to be the leadership of the organization. But it does not remove the role and the responsibility of the employees. You've used very fantastic examples. You cannot come, to work late and expect, to get full pay, for instance. People tell you that I tell people that, employees like to point fingers, to the top. But are you doing the right thing that will make the top happy to reciprocate? It's always, that reciprocity needs to be there. And many times, both sides think, from one perspective. So what you just said is spot on, which is that culture is the responsibility of everybody.
So how can an organization build that culture, to ensure that an employee, not just an employer right now, because everybody's vision or goal is to grow an organization, is to grow a business. Be you an entrepreneur. If I'm an entrepreneur, my vision is to grow my business, to ensure that I make profit and to ensure that I impact, the society. And then any other person working with me, I have to carry along. But then how do I begin to inculcate such culture on those people?
Okay, so what I feel has happened over the years is that the requirements for leadership has kind of changed. Now every company is talking about millennials and the effect of millennials in an organization and things like that. The kind of leadership you would have you required 10 years ago is very different from what you need now.
True.
Now, if you have a lot of millennials in your organization, guess what? Their needs are very different from what we had 10, 20 years ago. Right now, they are more emotional. They want to move quickly. It's quite different.
Emotional intelligence is
so
top
the
on the list
kind
now.
of leadership that you need now is that kind of leadership that says, I understand people. It's almost like saying the CEOs of today need to become HR experts because of the kind of people they're dealing with. You would hear employees now say, oh, they are not even feeling me. They don't understand what I need. I say, how? Have you done your job? Don't do your job. Focus on the work. But they're talking about feeling, sensitivity.
That's emotional intelligence. That's top on the list.
It's top on the list these days.
Yes.
So I tell a lot of CEOs and leaders that, hey, if you don't have this and you cannot develop some of these skills that are required, it might be time for you to think about getting the right kind of
But
leader.
it doesn't seem to be part of our culture, which is why, in the Western world, they have gone to that level where emotions and psyche...
So Ini, let me tell you why we need to also be careful, in terms of how we also compare with the West. Because these same employees we're talking about, guess where they're getting information from?
The West.
From the West. It's the internet, right? So a lot of the behavior you're seeing is not unusual. It's global. It's a global phenomenon. They're expecting it because they've seen XYZ company in the UK or the US do it. Or they're interacting with some other people. So at the end of the day, it's not a bad thing. All I'm saying is that, the leaders now need to understand that the skill set required today is different. And if they cannot acquire it, they should find those that have it.
All right, just hold your thoughts there, and we'll take a break. When we come back, for an entrepreneur or someone who wants to start a business, there are certain questions you would have to ask yourself, and particularly finding yourself in an environment such as Nigeria. So we would want you to share some of those thoughts. If I want to start a business now, what are the questions I have to talk to myself? What kind of questions I have to ask myself.
No, not a problem.
That'll be
All
after
right,
the break.
we'll take a break now. We'll be back in a moment.
Welcome back. We still have Chukwuka Moye sharing his thoughts with us on starting a business, building a dream. And well, like Chimi said before we went on a break now, we have a lot of millennials now with a lot of creative ideas and innovation. And the problem is starting. A lot of people say it's about finance, but I've heard people say that you don't build a business on finance, you actually build it on ideas. So what are some of those factors that one should look at if you want to start a business?
Okay, so you've made a very good point. You build on ideas, but I want to take it a step further because ideation is something that is not lacking in Nigeria. Everybody has ideas. If you go to any joint, man, the idea is mad. You know, they always have something cool. But if everybody's generating ideas, why do we have such a low rate of converting these ideas into business? There are a couple of factors. Funding is not number one, like many people would, normally suspect and talk about. It's not funding. Because I tell people that if an idea is solid, if a product is good, money will find it. You know, people need to remember that investors, by their nature, actually want returns. They want their money to work for them. So they're actually out there looking for something that is, very solid, very viable. Okay, so let's first of all, just park that aside. It's not money. What are those things? One is that the product is actually meeting a need. Okay? That it's actually meeting a need. So everybody just believes, again, because we're in an increasingly superficial environment. You know, social media is a big deal now. But the fact that you put something up on social media doesn't make the product good, right? You're still going to go back to the fundamentals. Oh, what is your target market? You know, what exactly do they need? What is the product you're creating to meet these needs? These are some important things that you have to do. But that's as far as the product and the customers are concerned. If we move beyond that, in terms of your capacity, your capability, I tell people all the time that it's one thing for you to say, I have a product. This is the market it's going to serve. But do you have the capacity and the organization that can deliver on this product? That's another thing. You know, very many times I advise people and clients to focus on their own strength and build from the known to the unknown. If you build a product, a service around something that comes to you naturally, it's easy for you to sort of transfer that knowledge. But if you don't know it, you don't have the skill, you don't know where to get it, but you heard that somebody else is doing it and it's good, therefore you are doing it.
That brings to the issue of a lot of people not being honest about the reasons they want to start up their own businesses. Because you find a lot of youths now, oh, because Mr.
XYZ did it. Yes.
I want to do
Yes.
it. So honesty plays a role here. You tell yourself the simple truth. Why do you really want to do this?
Exactly. And the reason why it's critical for you to be real with yourself is, I mean, we've spent some time earlier in the previous segment talking about the economy and how it's contracting, et cetera, et cetera. It's in the tough moments that the truth comes out. So if you've not designed a business around, you know, some real essence, some truth, some fundamental, you know, elements, guess what? You know, you will struggle when the economy, you know, I guess contracts on you.
All right. Thank you very much, Mr. Moye, for sharing those thoughts with us. Thank you. We do appreciate it.
Thank you for sharing parts of your Easter with us.
It's a pleasure.
Well, this was a real good inspiration. You know, for a lot of people would be at home at this time, you know, especially after discussing the economy and seeing the figures and all that.
Particularly the youths who may perhaps be frustrated because they graduated from school and they don't have any job. Everybody's waiting for a white-collar job, and then you have an idea, and then perhaps because of the harsh economic environment, you'll say, you know what, I really can't do this. Don't despair.
They can
so
do
you
well,
can do this.
Yes, you can do
that's
it.
what
That's
Mr.
what
Moye is
I'm
saying. You can do it. You just have to be honest with yourself, find out your strengths, and then you package your idea, which will be the product of what needs it to be taken care of.
Thank you.
Thank you so much.
Thank you very much.
Thank
you so much. We do appreciate your time.
It's a pleasure.
Okay, let's move to the market that never sleeps, and that's the crypto market. Ladi, what's happening there? The Easter holiday.
Easter holiday, but Bitcoin doesn't care about the holidays.
We know.
Traders are still trading.
We make money every day.
They're still making money. Let's look at the market cap. $1.92 trillion, up about 0.71%. 24-hour volume, $154.17 billion, down about 6.91% in early trade, about 8 a.m. this morning. Bitcoin dominance, 56.23%. Very interesting number here. That's why most of these altcoins have been surging over the weekend and today. Price of Bitcoin as of this morning, $57,927, down about 0.31%. 24-hour volume, $49.851 billion. Let's look at price of Ethereum, $2,000, up about 0.33%. Let's talk to Gilbert Jopata now. Hello, Gilbert. Great to have you.
Yeah, good morning, Ladi.
Good morning, Gilbert. Yeah. So some of these altcoins have surged over the weekend, and their year-to-date performance, some of them have done about 4,000 to 5,000%. Phantom, I remember, did about 14,000% year-to-date. When is it time to take profit on these altcoins?
It's really been an interesting time in the market. And I can assure you, I have seen this played before. Any trader who takes profit right now will be left out of the market because we are going to see bigger and better price surge. However, if a trader's investment goals have been met, it is very okay for such trader to take profit. But whatsoever anybody is doing in the market right now, such person don't want to be left with an empty portfolio, because we are going to see better price surge. But if your investment goals have been met, it is okay to take profits, but don't be left with an empty portfolio.
And that's where greed comes in, I guess, because I remember the last bull run, when it ended, a lot of people lost out on their profits. We don't want that to happen again, right?
Yes, you wouldn't want it. That is why you need to go back to your investment goals or investment plan. If it is met, you don't want to be left without taking profits. It is very okay to follow your investment plan. Your investment plan should tell you when to sell.
Exactly. What is your outlook for price of Bitcoin for this week?
Well, this week, I think we will likely accumulate, but I think we are heading towards the $70,000 zone. But presently, I think this week we may accumulate within this present price, the present price we are in. But we are heading to a 70,000 anytime from now.
Quite optimistic. All right, Gilbert, thank you so much. Gilbert is a crypto market analyst. Thank you so much for your time. Happy Easter.
All right. Thank you, Mr. Ladi.
Thank you. So, top odds by market cap, BNB up about 2.11%. XRP doing good today, 17% up, 70 cents. Some positive news from the SEC. They allowed the XRP to remove the bid on because of the problem with the SEC. So they were able to not allow them show their emails, their private emails. So that bid helped XRP there, up about 70%. WRX, WazirX, Indian Exchange, up about 219% this morning. Massive run there. They also are allowing NFTs to be traded on their platform. So that's one of the reasons you see WRX pumping there about 219%. BTT 65% up. Flow 27%. Tron 21%. So the altcoins are looking good. Chimmy and Ini, it's not a bad time to be in alt, I must say.
And Gilbert is saying whatever you have now, you keep holding it. I don't know how strong-hearted someone would be.
Strong hands is what they call
you're
it.
seeing your portfolio increasing and you wouldn't be tempted to sell it. Just wondering how that works.
There are better days ahead, Chimmy. That's what one should always have at the back of one's
Cautious
mind.
optimism.
Well, Gilbert says, what you have now, hold it because there are better days ahead. But this is not financial advice, I must say.
Exactly.
All right, that's it on the program. Thank you for watching. I'm Chimeze Obi Iwagu, and happy Easter.
And I'm Ini John Mekwa.
And I'm
Tomorrow.
Ladi Williams.